Bitcoin is unlikely to hit over $200,000. In fact, I think it will really struggle to even pierce higher than 150K. This might not be what all those retail investors out there want to hear, but I'm going to go through why I believe that Bitcoin is seeing diminishing gains over time and why 120K is the most likely high that Bitcoin is going to have in that next bullish cycle. Let's roll the intro and get right down into it. Hi guys, welcome back to the channel. Welcome back to another Bitcoin video update. We are going to be taking a look at the macro charts and I'm going to be explaining why I think Bitcoin is potentially not going to have those big moonshots that so many people are hoping for. There's going to be a lot of logic that goes into this and I'm also going to show you the pitfalls to this as well. So we kind of cover the basis here. It's kind of why I believe that we're not likely to see these kind of really high, big kind of bullish movements for Bitcoin, but also where things could change and how we could break out of these bearish or less bullish kind of scenarios and break out into those really big moonshots should certain things unfold. Okay, so let's jump into the desktop and start talking about what is going on when it comes to Bitcoin, right? So on this macro chart, this is Bitcoin paired up with USD. 1 week Bitstamp is our data source. This kind of covers the entirety of Bitcoin's history. And I've drawn on two lines on the chart, right? We have the low trend line, and we have the high trend line. These are just curving, connecting all of the peaks of the bullish markets and all of the lows of the bear markets. And as you can kind of see, we have diminishing gains over time. Now, when we talk about diminishing gains, it's important that we understand what is actually causing that. And so I'm going to just spend a few minutes right now talking about elasticity. Okay, elasticity is a measure of a variable's sensitivity to a change in another variable or a single variable. So there's lots of things that we have to kind of consider with this. There's lots of different types of elasticity. And I'm just going to kind of briefly break down kind of some of the key points of elasticity, why it matters and all that kind of stuff. So most commonly, this sensitivity in change is basically the quantity demanded relative to other changes in things such as price, right? And in business and economics, price elasticity refers to the degree in which individuals, consumers, or producers change their demand or the amount supplied in response to price or income changes. These are things that we kind of talk about quite a bit on the channel. So when we talk about, price movement of Bitcoin, we can also talk about the supply and the demand that is feeding into those price movements. Because unlike kind of traditional kind of markets, we aren't really talking about supplying goods necessarily or supplying things like petrol, diesel, or milk and bread and things like that. It's not the standard kind of supply models. Instead, what we're talking about here are cryptocurrencies which have either a finite amount of supply or they have some kind of token issuance, like token unlocks or mining operations, right? Sometimes the supply is infinite in the case of like Atom, for example, and sometimes it's finite like in the case of Bitcoin, right? There's only 21 million coins that will ever exist. And obviously there's a mining schedule to those things as well. So it's really important that we understand that with cryptocurrency, things are slightly different to the standard economical models, but nonetheless, the principles of elasticity still remain. And so when the other part of this argument, of course, which I mentioned, was the income changes, right? Obviously, people are really getting squeezed down with interest rates being the way that they are, inflation being the way that it is, and income not really changing all that much. Okay, so we have to understand that there's income challenges as well as price responses to supply-demand changes. All of these variables help us understand how elastic a economy is, right? And in the case of Bitcoin here, that's what we're talking about. Why we think there's going to be diminished gains over time is basically due to the elasticity of BTC. So let me break this down in a little bit more detail, right? Some of the key points when it comes to elasticity. Basically, elasticity is an economic measure of how sensitive one economic factor is to changes in another. And so that means in the case of Bitcoin here is how sensitive is the price movement if the supply changed or the demand changed, right? Even sometimes the supply and demand in themselves changing can, of course, have a more dramatic effect on price. And of course, there's potential income changes, the people who are looking to invest, that could also have an impact on the demand side, which will therefore have an impact on the price side. Okay, so all of these are talking about lots of different variables in the equation to try to drive out what the price is. Now, a lot of people will kind of just sit back and say, look, it's nothing to do with supply demand. It's always going to go up. It has to go up. It has no other alternative but to go up. And there are a lot of arguments to kind of say these things. However, they don't really make a lot of logical sense. In the same way that we have that argument with the Bitcoin miners, right? Bitcoin's price has to go up because the Bitcoin rewards for miners are being halved, right? And so the Bitcoin's price has to go up. And it doesn't have to go up at all. One of the things we have to understand here is that because the rewards for mining Bitcoin are slashed in half, it means that they're going to have to work double as hard to make the same amount of money, right? Essentially, that's kind of how the Bitcoin mining works. But obviously, mining operations are also based on the demand side, right? How much demand there is for transactions on chain is going to basically determine how much work those miners have. They can't just double their output, for example, if there's not double the amount of transactions and things like that. So it's quite a complex thing that we have to kind of talk about. And so we have to kind of be an open mind here as to kind of understanding that just because, Bitcoin halving is coming and they're going to halve the rewards, it doesn't necessarily mean the price has to respect and move upwards. And this is a concern that I've had for all proof of work models for a very long time. What happens if the supply and the demand becomes quite stagnant and price becomes quite stale? It just kind of trades sideways. It kind of just gets stuck in a range. Well, what happens to those mining operations if they no longer are profitable? Some of the crazy arguments I hear is, that miners will just buy Bitcoin, but that really doesn't stick because they're going to have funds to buy the Bitcoin that might be cheaper than it would be for the operation. It's just crazy stuff. Anyway, getting back and getting away from off that topic there, we're going to go back and talk about elasticity a bit more, right? So knowing that it is all about the changes in one variable that could affect other variables that could actually have a different output. And this whole measure of elasticity is all about giving you an idea as to whether or not the market is elastic or inelastic. Okay, so if the demand for Bitcoin is relatively static when the price changes, demand is said to be inelastic. And its coefficient of elasticity is less than 1. Okay, now we're trying to get into some of those technical kind of elements for elasticity. Now, examples of really good elastic-based products would be things like clothing and electronics, while inelastic products are like food and prescription drugs. Essentially, the price can change of food and prescription drugs, and usually the demand and supply is perfectly fine. Sometimes, though, you do find that price-sensitive products like electronics or automobiles, you'll find that if the price were to drop a little bit, that demand dramatically increases, for example. Should the price of, let's say, prescription drugs drop a little bit, you're not going to see a huge uptick in the demand. So understanding, the types of things that could be elastic versus the types of things that could be inelastic. In the case of Bitcoin, we are talking about something that is basically inelastic, in my opinion, to a degree, but elastic in other scenarios. And this is why Bitcoin can be quite complex. So, for example, we could find, and I do think we are in a elastic situation at the moment that could become elastic over time, given everything that's going on with Bitcoin spot ETFs. It's kind of a bit of a thing to kind of think about. So just bear with me as I try to just explain a little bit more about how elasticity measurements work so that we can then jump into this chart and explain what's going on. So when the value of elasticity is greater than 1, okay, it suggests that the demand for the goods and the services is more affected by the change in its price. And a value of less than 1 suggests that the demand is relatively insensitive to price movements. Okay, so in the case of Bitcoin at the moment, I would say it is elastic, meaning that the price movement does in fact change the amount of demand that is interested in BTC. Okay, so the amount of people that want to buy Bitcoin or the amount of interest in accumulating Bitcoin changes depending on the price of Bitcoin. And of course, the demand and the supply also happen to be the key factors in changing the price of Bitcoin, because it's not set by any one individual. It is set all around the supply and demand imbalances. And so when we see supply and demand imbalances, price either moves to the upside or moves to the downside. And as such, we also see an increase in demand when that price is affected in a rather negative way. We see a significant amount of people wanting to buy Bitcoin at a cheaper price and potentially not wanting to buy it at such a higher price, right? And so we understand that the supply demand elements of BTC drive price, but also that price that is being driven can also then backflow into the demand side of the argument, increasing or decreasing as price moves up or down. Okay, so understanding elasticity is quite important when we start talking about the price action of Bitcoin over a macro view. Okay, so I guess that's kind of the more complicated part of this video over with. If you're looking for a little bit more information about the elasticity, then hit Google, right? It's your friend. Check it out. Investopedia has some great articles on elasticity curves. And of course, they will go into a lot more detail into the different types of elasticity that are out there. Really, we're only interested in price. Now, as I come back down into the charts here, if I hit the right button, we obviously have got what we can see is a curved line that goes from the start of Bitcoin time frame to basically the future. Now, with this, we can see that there were diminishing gains over time, and this is because of elasticity. Okay, we basically find that as price pushes up higher, the demand drops down. So the higher the price, the lower the demand. Okay, now with this, we have seen pretty significant spikes to the upside. And this basically has shown us over the history of Bitcoin that Bitcoin is an elastic product. Okay, and the supply and the demand variables are changing based on the price variable. Okay, the supply demand changes price, and the price then changes the demand. It's kind of like an ongoing machine. Now, what we have seen is diminishing gains, meaning that the higher that the price has gone, the lower the demand has come. And obviously, in the very early stages of Bitcoin, it was really easy to see really good amounts of gains for BTC. Okay, so we can see October 2011 to November 2013. This was 52,000% in gains, right? And again, we saw very significant growth in this period because supply was low. Okay, so demand came in, and because there is such a low supply, there was a demand supply imbalance that pushes price to the upside. Now, as price pushed up higher, the demand to buy BTC drop down lower, and then you start to see the reversal, and you saw the bear market. Profits were getting taken out here because there was very little or insufficient demand to be buying Bitcoin at the premium prices, so you saw Bitcoin's price pull back down. Once we kind of finished off this bearish market and value was back found again, and the balance between supply and demand was found, we started to see another surge to the upside for BTC, taking us from our 2015 low up to the 2017 high. Okay, January 2015, December 2017 was 12,804% in gains. And so we do see that during these two particular cycles, we saw diminishing gains. Again, the higher the price went, the less the demand came. And of course, during all of this time period here of 2011 to 2017, that 8-year period, we saw an increase in the amount of Bitcoin that became available to purchase. This is through mining operations, and ultimately we had a really low supply base. Now we had a more reasonably high supply base, and so with the variables of supply and demand being imbalanced as an increase in demand occurred, we saw the next bullish market, but it was a lot lower than the previous bullish market because we are talking about different underlying variables. The supply was significantly higher, the demand was significantly lower than it was previously, at least in relation to creating imbalances in the supply and the demand, and as such, the price in itself pushed up towards $20,000. And again, so the higher the price, the less the demand, that backfed into the variables of supply-demand imbalances, and we saw the reversal, we saw the push to the downside into the lows of 2018, okay? So from here, we then saw the next bullish market, right? We saw this from December 2018 up to November of 2021, just 2,109% in gains. Again, we are operating from a different variable base, right? We have basically a much larger supply base now because we had a lot more Bitcoin being mined during all of this cycle and the bearish market. So the supply was high, the demand came in that was higher than the supply could handle, and price did push up higher. But the higher that Bitcoin's price pushed, the less demand there was to buy it. Obviously, a lot of people who have been around know that Bitcoin's price was previously 20K. As soon as we start hitting 60K, we know that the value isn't there. So intrinsically, people start to sell, and that selling pressure or lack in demand for buying starts to see a reversal in price. We have the bearish market. So where do we stand in that next bullish market? Well, as I said, I think if we hit this upper trend line like we had seen before, we'll see less than 1,000% in gains, approximately 613%, of which we are pretty much about halfway there. I do see us moving up towards the $110,000 to $120,000 level, and I think that's realistically where this one is likely to kind of finish out. Now, of course, as I mentioned earlier, there are many things that could potentially change this elastic market that we find ourselves in, and it could become an elastic market, meaning that the changes in supply demand do not actually have a direct impact on price, or the price movement, sorry, I should say, the price in itself doesn't backfeed into changes of demand, meaning that people are less interested in the price of Bitcoin, and they are still going to continue to have that demand. Now, the Bitcoin spot ETFs could be this catalyst. It's not something that we've seen yet. It's not something we've seen in the history of Bitcoin, but it is possible that because of Bitcoin spot ETFs, that the market that was elastic becomes elastic. And that in itself could actually mean that we end up with one of these big breakout situations where regardless of price, there is still a constant demand for Bitcoin. Of course, this is a kind of, I guess, a wild card, something that I think is unlikely to occur, because I don't see us really kind of breaking out of that mindset of supply demand imbalances, and obviously price being higher, preventing extra demand coming on in. Now, the only other kind of variable here that is of concern would be the supply element. Okay, supply can shrink quite a bit because of these Bitcoin spot ETFs, and we might find that a short to medium term positive, but I think in a longer term Bitcoin future point of view, it's quite a negative. I don't think having a centralized control of BTC's supply in a Bitcoin spot ETF is a good positive for a decentralized world that we're looking for. Is this potentially the end of Bitcoin as we know it and the beginning of a new centralized Bitcoin in the future? You can let me know what all your thoughts on that in the comments down below. If you're interested in my thoughts as to what I think is likely to happen in Q1 and Q2 of this year, then why not check out this video here where I'm discussing Genesis's basically an application to sell off $1.6 billion worth of assets.